Hi, everyone. This is Jason Barrick with Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today, we're recording on Wednesday, February 12th, 2025. The Bitcoin price is around $97,000. It's corrected a little bit. The US dollar gold price has been rallying. It was in a trading range for a while, but lately, since Trump won the election, and then once Trump got inaugurated, it's been rallying a lot. Almost hit $3,000 earlier in the last couple of days. It's corrected to around $2,900 right now. Today, I'm with a gold fund and Bitcoin fund manager, a returning guest. He just put out a new book. It is number one or number two for top finance book on Amazon. Also for global macro, number one or number two already. The book just came out. It's called The Big Print: What Happened to America and How Sound Money Will Fix It. Lawerence Lepard of Equity Management Associates. Thank you for joining me again.
Hey, thanks, Jason. I always enjoy our conversations a great deal, so I'm looking forward to this one.
Me too. And you're one of the people that's bullish on both gold and Bitcoin, and
Yep.
gold and Bitcoin have been doing really, really well lately. So let's have a chat first about like the macro situation and your book. So the debt problem, I mean, Trump, we hear the Democrats right now on mainstream TV talking about like it's Trump's fault for all this inflation and the food prices, but Trump inherited an enormous inflation mess, didn't he?
Oh, yeah. No, I mean, look, how can you blame him for anything when he's only been in office for a month? I mean, he's got an economy that was created by people in front of him who ran enormous deficits, which are going to need to be monetized, and created 40% of the money supply in a 2-year time window, or, surrounding COVID, which created the hot inflation that we had. It got as high as 9% at one point. So.
Well,
Yeah.
9% on the CPI, but who believes that? I call that the
Well, that's what I
CPI.
was going to say. I mean, and even that is cooked, as you and I both know. And actually, my book talks about that. There's a part of my book that shows the shadow government numbers, which are much more accurate.
Yeah, the Congressional Budget Office, which a lot of Wall Street sites and both political parties tend to cite, and honestly, I think they're liars. They're claiming that the national debt will only be at 40 trillion by 2030. I mean, Lawerence, aren't we on pace to hit that in like a year and a half, 2 years, something like that?
It feels that way. I mean, one of the interesting accounting anomalies is that we ran a deficit of 1.8 trillion last year, but actually the debt went up by like 2.4. So we must have some off balance sheet or off income statement stuff. I mean, the debt, with the debt at 30, almost approaching 37 trillion and adding 2 or 3 trillion to it a year, I mean, we're going to be there much faster than they project.
And I think the macro trade here from the non G7 central banks, and we were talking about this before we started recording, that really the turning point, the paradigm shift happened with the Russia sanctions in early 2022.
Correct.
Because prior to those Russia sanctions, yes, central banks, the non G7, were accumulating gold tonnage. But the monthly number of gold tonnage purchases has about doubled since the Russia sanctions. Here we are 3 years later.
Correct. And this is all just the function of a sovereign debt crisis that we're in. My book has two charts in it that show that since 2020, in bond terms, gold is up 200%. And in Bitcoin terms, Bitcoin is up 2,000%. And so Bitcoin compared to the bond. And the bonds, the US 10-year Treasury used to be the base layer of finance. It was considered risk-free. And, it gave you kind of your risk-free reference rate of whatever interest rate it carried. And it's failing because we are in a sovereign debt crisis driven by what I call the debt doom loop, which is the interest rate continues, its interest rates go up, the interest expense goes up, making the deficit larger, meaning we have to sell more bonds. Selling more bonds means more interest rate going up, and so on and so forth. And this is a sovereign debt crisis. We've seen this in developing countries before. We haven't seen it in the world's reserve currency ever. But we're kind of experiencing it now. And the reason that we know that's to be true is that gold is, in spite of, real interest rates being, theoretically, being positive, gold and Bitcoin are making all-time new highs.
And like you said about interest rates, I mean, so there theoretically would be the incentive for other countries that are running trade surpluses to go recycle their foreign exchange reserves or trade surpluses into US Treasuries. And that is really not happening with the non G7. So in 2024, according to the World Gold Council, 1,000 tons of physical gold were added by non G7 central banks. That's around 40% of the mine supply. The mine supply is give or take 2,500 tons per year. So these central banks, like you said, Lawerence, they looked at the treasury yields and said, we don't like policies out of DC. We don't trust the real inflation rate or the CPI that DC is saying. The budget deficits. I had the budget deficits not at 2.4 trillion. I think they were closer to 3 before Biden left. So the off
Well, I
balance sheets.
agree. I mean, that's one of the problems that we're dealing with, as you've alluded to. I mean, all these numbers, as bad as they are, they're actually worse than this if you really dig into them deeply, right? I
Well,
mean,
the jobs reports numbers are revised
yeah,
downwards. I
there's
think
another one. That's another example.
The GDP
Yeah,
is counting all these government employee
yeah.
jobs. Government spending is positive. Wasteful money on transfer payments and healthcare for non-residents. So all this stuff is counted positive, but really it's actually not helping the economy at all. But it was counted positively, and so I think a lot of foreign governments are looking at this and saying they're wasting all this money. They're running insane budget deficits, and we don't want to subsidize it anymore by buying treasuries.
That's exactly right. That's exactly right. I mean, they can see the fiscal mess that we have, and they are voting with their feet in terms of where they're going to put their capital. I mean, you know, foreign purchases of treasuries have never been positive since 2014, and they've grown increasingly negative. And so as people come to see that we've got a debt problem here that's only really resolved through additional printing of money, they don't want to hold this money. It's just as I advise my investors, I say, you want to own things that the government can't print because the math, just the hard math, not the politics even of it, dictates the government's going to have to print a lot. And of course, that's what led to the name of my book, the big print, because we've already had a couple of big prints. I mean, '08 was a big print and 2020 was a big print, but I think there's an even bigger print coming next.
Oh, you mean like debt monetization? What do you mean exactly by
I
what would the
do. I
government
mean,
print
yeah, I
on?
mean QE and debt monetization. I think ultimately what will happen is they will lose control of the federal debt market, the US debt market. Interest rates will go higher. They won't be able to jawbone them back down the way they did in the fall of 2023. And they will have to go to some form of yield curve control, which is quantitative easing. And quantitative easing really means that they will have to purchase their own debt with newly issued dollars to do so. And that is really, that's like eating, chasing your own tail. You're using your own money to purchase your own bad debt. And, eventually everyone is going to figure out that they can never stop doing that. And then what you and I know to be called Gresham's law will kick in and everyone will say, why should I hold these dollars? They're losing value incredibly quickly. I need to put things my savings or my capital, my, surpluses need to be in something that they can't print. And
Which is which
yeah,
is
the
Bitcoin and
two
gold,
new,
right? Restricted.
yeah, I mean, the three categories, the three possible, well, there are four categories. We include real estate, but it's got a lot of issues, including taxation. But, Bitcoin, gold, and silver are the three obvious categories.
And the last couple of days on Fox Business have been very, very unusual because a good friend of President Trump is Larry Kudlow. He's a supply side economics guy. I think he was in the running for Treasury Secretary at one point or one of the top economic advisors to Trump, and he chose to stay on the business channel. And the last couple of days, Lawerence, I mean, he's been having guests on like Steve Forbes and others, but he spent time on his show. And I don't know if this was approved or if the Trump administration is leaking this. They want him to start repeating this publicly so the public is more open to it. He's been talking about revaluing the gold on the U.S. Federal Reserve Bank, U.S. Treasury balance sheet, revaluing it up to $3,000 an ounce instead of $42 an ounce, that ridiculous price valuation, talking about how basically the Federal Reserve Bank is deeply underwater on a lot of their mortgage-backed securities and older U.S. Treasury bonds. And he basically called the Fed insolvent unless they revalue the gold price. I'm just shocked that they've been speaking like 10, 15, 20 minutes on each show the last couple of days about this stuff.
Yeah, I've missed those programs specifically, and you told me about them before the show started here, and I'm not surprised, and it's just another indication because if you've seen, it's come from the Treasury Secretary too. As you know, Scott Bessent, the new Treasury Secretary, is a big gold bug, believes in gold, knows how important it is, and has more or less said one of the things we want to do is we want to, revalue the asset side of the U.S. government accounts on behalf of the American people. Well, I mean, unless they're going to go sell Yellowstone Park, which I don't think they are, about the only assets the government has, that haven't been revalued or valued highly enough is the gold deposits that they claim to have. And of course, we can debate whether they really have them. But and so it strikes me there've been a lot of signals that would suggest that yes, this government is going to do some kind of a monetary reset, and it's going to involve gold. and it's going to have to be at a much higher gold price. And so, for those of us who own silver and gold and precious metals and the mining stocks, this will have an enormously positive effect on what we hold. And so, it feels to me like it is kind of imminent and it's coming. It hasn't happened yet, so there are never any guarantees. But boy, you're hearing a lot of signals from a lot of parties. And my sense is when those kinds of things start to be talked about at the government level, it leaks. And I think this is part of what, when I look at like this, I'm sure where we're going to go next is if you look at the LBMA, the London Bullion Market Association, the biggest gold market in the world, they've been shipping gold to the COMEX because the COMEX is getting, big withdrawal requests. And so, the LBMA, who used to be able to satisfy any requests very quickly, has now gone to kind of 8 weeks of delivery, and they had some kind of silly excuses like, well, the stuff's heavy and there are lots of lorries in the street. We can't, remember
Can't
that?
use
I
the
mean,
pandemic anymore. Can't use like, oh, our due to the
yeah, I
pandemic,
mean,
everything shut down.
right. I mean, just some nutty excuses, but I mean, it's kind of like, well, okay, do you really have the gold, and why, why is there a delay in shipping, and what's the problem? And so,
Well,
I think that's driven by an increase in demand. And I think that increase in demand, my gut is it could be coming from the US, who is saying they want to get more, the government even wants to get more gold before we revalue. But I also think that if it's being talked about at government levels, that's leaking out to big, smart, connected money to the billionaire friends of Trump and others. And they might be thinking to themselves, hey, you know what? I should take some delivery on gold now before this big reset takes place. I'm guessing that might be going on.
yeah, I think you're right. I think there's also like big oil money, other sovereign wealth funds. I mean, I've seen headlines where a lot of sovereign wealth funds in or pension funds in like Thailand and others that they started buying like tens of billions of dollars of gold for the first time over the last year or two. So you're starting to see other countries or pension funds in other Asian countries or European countries that were not big buyers of gold in the past, and over the last couple of years they've started adding even a small allocation of gold tonnage, but that will, especially if they buy the physical, it will start to affect the market. The other issue, Lawerence, with the LBMA is that over the last like 7 years, I want to say, you've had a lot of governments, so whether that's Germany, Poland, India, they've asked for gold repatriation. So they've taken their gold back out of what the LBMA,
Yes.
out of the Bank of England holdings, and that gold's not there to use as collateral for all the leases and swaps and hypothecation
Right.
and rehypothecation. That gold is gone.
Right. And as most of your listeners probably already know, I mean, those of us who've been in the gold area for a long time, strongly believe that there have been more claims sold on gold than there is gold that exists. And so it has the feeling of a game of musical chairs where somebody might own a paper claim to gold, but maybe that same ounce of gold has been sold a few times. And so if everybody asks for their gold, it's like a fractional reserve bank. If everyone asked for their gold at the same time, there wouldn't be enough gold to satisfy the demand. Or in order to satisfy the demand, the price of gold would have to go up a lot so they could source it from other people. So
Or,
yeah, I
or,
mean,
or they start approving mining again because, like,
well,
I
there's that
think,
too. There's that
yeah,
too. But
yeah, because the U.S. has a lot of gold. I mean, we have a
it
lot
does.
of gold deposits, but like getting a mine approved here in the United States for many, many years due to the environmental protection and the state regulators, the environmental regulators, and all that stuff, all the rules, regulations, red tape, permitting at the state and local level, at the federal level, it's just so difficult. Hopefully, Trump will fast track a lot of these projects.
I think that's right. And furthermore, I mean, I think it's important for people to understand. I know some people in the Bitcoin area are like, well, if the price of gold goes up, you're just going to mine a bunch more gold, so it can't go up that fast. And I think they don't fully appreciate just how difficult and time sensitive. I mean, from start to finish, building a mine takes a lot of time and a lot of capital, and there's a lot of risk.
It depends
So,
on the mine. Yeah, it could take over
yeah,
a decade. I mean, if it's a 200,000, let's say it's 150,000 or 200,000 an ounce per year gold mine, I mean, it's going to take probably a decade or more.
correct. I mean, there's some that are shorter than that, but the point is yes. And so the notion that a higher gold price is going to suddenly create all this supply and we're going to flood the market with a new supply, no, there's a big delay.
Oh, yeah, it's
Um,
not like an oil well where they can
no,
drill like new oil wells in 6 to 8 weeks. It's not like that at all.
not at all. There's a big delay. So yeah, I mean, we are seeing a world that's wake. In my view, what's going on right now is we are seeing a world that's wakening up to the fact that we are in a sovereign debt crisis, that the U.S. is in a very bad financial condition, and that therefore the value of the dollar is suspect compared to real stuff. I mean, it may be okay versus other fiat currencies, which are in as much trouble, if not more. But compared to gold and Bitcoin, which are making record highs, the dollar is in trouble. And I mean, global capital tends to flow to where it thinks it will be treated the best. And, it's very mercantile. I mean, there's nothing, people want to protect their wealth. People who are wealthy want to protect their wealth. And if they think that, the dollar is going to be debased, which it almost mathematically has to be, they are going to move to things that can't be debased, and Bitcoin can't be debased because we know there are only going to be 21 million of them. And gold gets debased every year because we mine 1.7% of the supply, but that's a very slow rate of growth compared to the 8 to 15% inflation, if you count inflation correctly, that we're running. So,
Well,
yeah.
all the fiat currencies are being debased at different
Yes,
paces. So it's not
correct.
like, so if you're a Canadian listener here, I mean, the Canadian dollar has gotten crushed against the US
Yeah,
dollar
it
for
really
years.
has. It's interesting. I'm kind of shocked to watch how badly the Canadian dollar's gotten beaten up in the last few months.
Well, look who's been managing in charge of the government, Justin Trudeau and the others. So they've mismanaged their economy. It's not like they have free markets and a lot of capital investment outside of China. So
Yeah, exactly. Exactly.
and they have amazing natural resources. We're talking like tons of oil and natural gas. If they finish those pipelines to get the oil and the natural gas pipe from Alberta to the coast there for liquefied natural gas exports, they have tons of really good copper and gold projects. So there's the potential there for a lot of that. But I mean, like a lot of those projects were blocked for many, many years.
Yeah, no, that's right. It's
But
absolutely right.
But the macro situation is really interesting, Lawerence, because I think the global economy is already in a recession or depression. And would you say that there's been a lot of flight capital that's left, like Europe, and this is like managed money, so like professional money managers, pension funds, institutional investors, hedge funds in those other countries? Would you say that a lot of that flight capital has ended up at what in gold in different currencies, U.S. dollar gold,
Well,
Bitcoin, and then tech stocks?
yeah, I mean, I would say, yeah, the tech stocks, I mean, it's what I see going on right now is it's starting to leak into Bitcoin. I mean, Bitcoin went from 58 to 100, and it's starting to leak into gold. Gold broke out from 2070, is now approaching 3,000. But we're still kind of early days there. And I think a lot of global capital has been hanging out in the tech stocks. I mean, I think, if you look at the Mag 7 and how well they performed, I mean, a couple of years, the stock market's up over 20% a year. And some of those stocks specifically have done extraordinarily well because they're somewhat of a monopoly. Not all of them, but some of them have a monopoly-like position. And so, a lot of capital has been hanging out there. And my sense is that, and on any traditional metrics, those stocks are extremely, extremely expensive. So they're priced as though everything will continue just as it is, and there won't ever be another economic downturn or problem. And as you and I both know, the problems do arise. We don't know where they're coming from, but they'll probably show up at some point. And so I don't consider the U.S. stock market, and particularly the Mag 7, to be a good place for capital to be. But I'm different than the rest of the world. I mean, the rest of the world is a lot of people are hanging out there, and it's been working for them. I mean, I felt this way a year ago, and I was wrong. It continued to work, and maybe a year from now I'll still be wrong. I don't know, but I do know that over longer term cycles, buying things that are very overvalued and expensive is a good way to lose money.
Well, I also think it's like flight capital that's leaving other countries like Europe where there's not as good at tech companies, there's not as much growth, they're already in recession. So the European economy is slugging along. It's not doing very well lately. And a lot of that flight capital from managed money is coming into US technology stocks. But isn't Bitcoin also like, isn't it close to almost a perfect correlation with the NASDAQ 100, which is
Yeah, yeah, it's a great point. And so Bitcoin is a liquidity widget in the sense that it goes up when there's more liquidity and goes down when there's not. And it's more sensitive than gold because, it's a younger market and it's a more volatile market. And yes, it has been very much correlated with the tech stocks. Now, I think over time that relationship will break because it represents something that they are not, which is it represents sound money. And I think you can have a tech recession, but in which sound money becomes more important. And I believe, and I've seen a little evidence of this looking at it day by day, week by week. I look at kind of the correlation, and it seems to have broken down a bit. I mean, there were some days when the tech stocks were down and Bitcoin was up, in the last month or so. So um, I believe over time that correlation will break, and the tech stocks will roll over because we're in a recession and they're overvalued. And the response to that rollover is likely to be the big print, as the book talks about. And therefore, at some point in the future, we are going to see Bitcoin continuing to make new highs, even though maybe the economy is in a recession and the stock market's going down. I mean, if, to me, so let's talk about gold and the stock market. Gold is inversely, generally speaking, historically, over long periods of time, gold is inversely correlated to the stock market. When the stock market's doing really well, credit's expanding healthy, and the money is not being debased, gold doesn't do particularly well. I mean, in the 80s and 90s, gold was not a particularly good investment when the economy was doing pretty well. In turn, when the economy rolls over and stocks go down, and the likely response is monetary debasement, gold can do extraordinarily well. As it did in the 70s, as it did, after 2000, when that stock market collapsed, gold went on a tear. And so I think we're at one of those points, inflection points, where the stocks are about to do poorly and gold's about to do well. Now, why do I say all that? I say all that because Bitcoin is really just digital gold. Gold is analog sound money, been around forever, and it doesn't have an adoption curve because everyone knows what it is. Bitcoin is gold on steroids because it's still being adopted. They both benefit from monetary debasement. They're both, in my opinion, they're both decent investments. The choice between the two, I kind of look at gold as being more like a bond and Bitcoin as being like a growth equity. And so, what'll happen in my view is eventually people will come to see that. And even though stocks are going down, Bitcoin and gold will be going up.
What I've been seeing lately, Lawerence, is that a lot of these meme coin people that are trying to get rich quick,
Yeah.
they're bashing Bitcoin too now. They're saying like, "Oh, you Bitcoin maxis are terrible. You're getting in the way of all the money I'm going to make on these short-term trades." Do you think these meme coins are bad for Bitcoin?
Oh, I think they're horrible. I mean, I think I call them shit coins. I mean, look, I'm not one who says there can't be other crypto that have decent, honest use cases. Okay. I'm not like, not everything's a shit coin, but so many, I mean, a high percentage of these other coins and memes and, are really, as you and I discussed before, they're just kind of pump and dump schemes where somebody's trying to, run the price up and sell into it and leave somebody else holding the bag. And that's a story as old as time. That happens in all stock markets, but it happens really, really badly in this whole cryptocurrency market. And yeah, no, to me, it's one of the more disappointing things that Trump did. I mean, I was so glad he won because he was better than the alternative, and many of the things he's doing are correct in my view. But when he announced Trump coin and Melania coin, I was like, oh man, come on, dude, what are you doing? You know, because it's just these, I mean, look, unless people view it as entertainment and gambling, in which case, okay, fine, it's like playing the lottery. You just realize you're taking a bet and you can lose, fine. But to think that you're actually investing when you're buying that stuff is just, it's nuts because most people who do it lose money.
And I think the point you're trying to make is that these meme coins are very different than Bitcoin because Bitcoin is more
Oh, totally,
decentralized. There's a supply
totally.
cap. There's
That's
actual
exactly
innovation.
what I'm that's and actually that's in my book actually, I mean, I talk about why this has been slow to be adopted and all the issues. And one of the Sam Bankman-Fried did a terrible thing to Bitcoin. I mean, when his whole thing blew up, Bitcoin went from 70 to 15,000. And and a lot of friends I talked to, a lot of people who were looking at Bitcoin said to me, I don't want to touch that stuff. It's all fraud. Look at Sam Bankman-Fried. And they're right. He was a fraudster. We knew it. We pointed it out. We told the SEC. They didn't listen because he was making big political donations. But
Wait, you tried reporting him for over a
oh
year or
yeah,
something? You
yeah.
knew he was a fraud and
Oh,
they
there were
didn't do.
many people in the Bitcoin community, including myself, who sent notices and reached out to the SEC saying you should investigate this guy. He had a video on the web where he literally talked about how he kind of pumped and dumped. I mean, it was like you create a box and you put some units in the box and you sell some units for a high price, and suddenly somebody
Well,
thinks,
their hedge fund was borrowing against customer funds, right? So that's
oh
like
yeah,
commingling. That's illegal.
and
No
there were
exchange is allowed to do that. Yeah.
yeah, the number of things they did that was illegal are staggering. And, that's how he got to be worth $8 trillion on paper. But once everyone looked behind the curtain and realized it wasn't real, it just instantly collapsed. And
Wait,
so,
is that what the T? Did you say 8 trillion or do you mean like billion?
no, uh, I don't know the answer to that. I think it might have been billion. It might have
I
been,
think it was.
yeah,
I think it was
it was
billion.
billion. I'm sorry, my bad. Yeah, it was $8 billion. I think the peak value on FTX was $11 billion, and his net worth was eight. That's correct. Yeah, I mean, it was all paper and it was a joke, but yeah, it was very nuts. And so, Yeah, I mean, Bitcoin is different in the sense that Bitcoin is an invention, and my book talks about this at great length and tries to distinguish between these other things which are just, pump and dump schemes, and what happened when the guys invented, and I think it's a group. I don't think Satoshi's one person, but that's just my personal belief that when these guys invented this thing, what they did is they figured out a way to create immutable, testable, provable digital scarcity. And that's a big, big deal. And it's a big deal because they tried it 5 or 6 times before that, and they all failed. Like, eCash and DigiCash and eGold and BitMoney, those were prior attempts, and nobody could figure out how to solve the double spending problem. The what's called the Byzantine generals problem. And so, until the technology came along where they figured out how to create a decentralized network where you didn't have to trust people, you could verify, through the mining process. Digital gold never existed, but now we actually have digital gold. We have a ledger entry that is rare and cannot be replicated, and it's fair to everybody because it's based on math and you can't cheat. And that's a really big deal, Jason. I talk about this in the book. If you think about money and human beings, I mean, for thousands and thousands of years, we've used lots of things as money, but every one of them you could make more of. And so there was always inflation to some degree. I mean, gold
Well,
was,
or clip coins, like
yeah,
you could cheat
right.
the
And you
gold
could
content
cheat
or the
or,
silver. Yeah.
yeah, or dishonest weights and measures. I mean, that's talked about in the Bible, right? I mean, yeah, so there've been lots of ways to quote unquote have what I call monetary tomfoolery. And yet here we now have a kind of money that will never be diluted. And it's like, wow, that's a very powerful concept. And so, I think that's what the world is trying to come to grips with. And that's what my book tried to address. That's the innovation here. And that's why we've had and seen the price performance that we've seen in this asset class. And furthermore, I don't think some people feel like, well, they're too late and we're way late in the game. And yes, we're later than when Max was buying it at $1 a coin, but we're not too late in the game because I think it's going multiples higher, from where it is today. I mean, I'm fully convinced it will go up 10x from here and then it'll go up 10x again. Now, the time frame for that might be 20 years, but it's going to happen in my opinion.
Well, I think Bitcoin gets unfairly blamed for the pump and dump losses. These people trying to get rich quick, whether it's
Correct.
what initial coin offerings,
Correct.
altcoins that are just copy and paste jobs of the Bitcoin blockchain code with no supply cap and no innovation, NFTs, non-fungible tokens, and now the new one are the meme coins, which are even worse than some of the other ones prior to that. They're all kind of pump and dump scams where there's like either burner accounts on social media pumping and dumping specific ones, or an Instagram model that has an enormous following that's just reading a script from her business manager, handler, similar to what Haley Welch, the Hawktwa girl. I mean, everyone like wants her head, and is there, and she has tons of lawsuits outstanding. I think she only made 200,000, give or take, on the pump and dump on that coin. I mean, there's business partners, people behind her that made millions of dollars in a couple days off that pump and dump.
Yeah, no, that's right. I mean, yeah, it's these pump and dumps are sick. It's sick, and I do not endorse or support that kind of behavior. And
But there's actual innovation though with Bitcoin, right? With the Lightning Network and other stuff, that there's actually like improvements upon that. And there's other legit crypto where there is innovations, where there's computer programmers actually spending work trying to make it easier to transact online.
yes, oh, absolutely. I mean, I think there's huge, huge, innovation and yeah, like I said, Bitcoin is different. And to be fair to all that other crypto, Jason, right now, I mean, so Bitcoin's a store of value currency. It's not a medium of exchange currency. I mean, it's too slow, it's too expensive to make, you're not going to buy coffee with Bitcoin, right? I mean, unless you use the Lightning Network. So a layer two is necessary for those smaller transactions. And Lightning is emerging as the layer two, but honestly, I've been disappointed. It's been kind of slower than I would have liked. And there's some other competing coins that might emerge as the layer two. And I'm not opposed to those if they're fairly issued, fairly controlled. They're not pump and dumps. They're just, I mean, even Ethereum, which I think the monetary policy on Ethereum, I think is dishonest. The notion of having smart contracts, crypto-based smart contracts. I mean, that will probably happen. I mean, some of the things that we deal with financially in the world will probably be tokenized. I mean, real estate might be tokenized. I mean, why do we pay for title insurance? Why not just have it all on a blockchain that's verifiable?
Especially
So
with
there,
all those scams going on now with the identity theft and how people's
right,
like titles have been stolen and then borrowed against.
exactly. So the bottom line is that the world is really changing rapidly, and we're becoming a more digital world. And one of the problems I've faced is just I'm a gold guy at heart. I was always a gold guy, and Bitcoin came along, and I eventually came to see that it was a better form of gold. And now I'm both still, but I'm obviously more excited about the upside in Bitcoin. And it's been tough to kind of drag some of the gold guys along, and some of them are really stubborn and still just can't see it. But we live in a digital world, and this run on the gold bank right now, and I mean, gold is so hard to move. It's so hard to verify. You've got tungsten coated bars. I mean, Fort Knox hasn't been audited since 1953. I mean, do we even have the 261 million ounces? I don't know if we do.
Let's send a suggestion box to the Department of Government Efficiency and to Trump people, see if we'll get like an audit of that stuff.
Well, it's interesting. I mean, Elon was talking about trying to get Ron Paul in to audit the Fed. Now, that's a wonderful idea, but the problem is that the Fed would never let it happen. And, the Fed is controlled by reports to Congress. And so unless we get a congressional act, the Fed is going to be unauditable, which is unfortunate. But yeah, and having Ron Paul audit the gold stores, yeah, that would be a great idea. Again, I think we just have enormous pushback from I don't know if I don't know if those gold stores are controlled by the Federal Reserve or the Treasury. They might be controlled by the Treasury, and maybe it's possible that they will be able to audit the gold, make sure we really do have it. I don't know. If we don't have it, I'm pretty sure they won't disclose that because we don't want China and Russia to know that. But yeah, it's what a mess. What a mess. I mean, and my book really kind of, as I say, is a layman's overview of how we got here. I mean, and it was years upon years of bad policies, and they've gotten worse over time. I mean, Nixon going off the gold standard was obviously a bad thing, but we
Didn't he start even though he's a Republican, didn't he, to appease the Democrats, kind of a compromise? He started all these government agencies that have been wasting, like the Department of Education and others. So he
absolutely. No, absolutely. Yeah, I don't know exactly his role in that particular one, but yes, I mean, look, the spending and the dysfunction in DC, it's both sides of the aisle. I mean, maybe the Dems are worse than the Republicans, but not by much. I mean, maybe the Dems want to spend the money on social programs, the Republicans want to spend it on war. I mean, we pissed away $8 trillion in the Middle East, right? I mean, that was just,
Yep,
you know,
Afghanistan. People forget this. Yeah, around $8 or $9 trillion, and
eight
that's
trillion. I mean, part of the reason we've got 37 trillion in debt is because we wasted $8 trillion, conquering Iraq so that it can now provide oil to the Chinese, and then, conquering Afghanistan so that we could then turn around and give it back. I mean, it's like, what? I mean, it was just colossal bad decisions. And, it made guys like Dick Cheney rich, and it made the military industrial complex rich, but it didn't do much for the rest of us, left us with all this debt and higher interest, higher inflation, and it left a lot of dead citizens in other parts of the world, some of whom didn't deserve to die, many of them didn't deserve to die, and then it left, a whole cadre of veterans who, you see and you run into in the airport who are, they've got a prosthetic because they're missing a limb because they walked too close to an IED,
and then the government won't give them any money for sustenance or healthcare insurance properly. The money was wasted on other stuff by the state of California and the federal level. So, like,
Oh,
our
that's right.
veterans aren't getting any financial help.
Well, they get some, but not enough. And look, it's just a lot of sadness, a lot of waste all around. And this is, again, the book talks about this. This is what happens when you get big centralized systems, and they get corrupt. The people who are in them learn how to protect themselves, and they become quote unquote corrupt people, and they do bad
Cantillon effect,
things.
right? This is
Yeah,
the Cantillon effect.
yeah, they do bad things, and I mean, the reason Obama was able to beat Hillary was that he was very strongly anti-war, and I mean, I think in general, if you look at the average American is anti-war. Like, why are we running around the world fighting wars? We shouldn't be doing that. And yet, then once Obama got in, somebody read him the rules and said, "Hey, unless you want to end up like Kennedy, we need to attack Libya, or we need to do these, cruise missiles over
Well, they
here.
they gave him the Nobel Peace Prize, but he killed more innocent women and children and old people as collateral damage, right, with drone strikes than any other president.
I think, yeah, I think that's accurate. So, I mean, it's just, look, as I say, it's both sides of the aisle. And I also say this in my book. I think the military industrial complex has got the government by the throat. You know what I mean? They just, and
Well, it's a financial incentive so that they're
right.
in bed with both because the Democrats used to be anti-war, and then Bill Clinton, once he got into the White House, figured it was more profitable to maintain for himself and his friends and to maintain political control by realigning the Democrat Party with the military-industrial complex. So the last couple decades, I would say the Democrats who used to be anti-war, they shifted post-Vietnam War. Once Bill Clinton was in control in the White House, they shifted their policy to be in bed, and that's how you have what CNN, who has what a live video feed at the Pentagon.
Yeah, no, that's exactly right. I mean, it's, in general, this government is not serving its people very well and hasn't for a number of decades. Again, in the book, there's a great chart in the earlier part of the book that shows trust in the government to do the right thing. And in 1960, it was like 75%. And now it's like 15%, because we've all sat back and watched the government do things that don't make any sense. And people aren't stupid. They can figure that out.
And the spending, and $8 trillion approximately was spent by the federal government in Washington, D.C. in 2024. It benefited most Americans almost very, very little, if not negatively, I would argue.
Oh, definitely. Definitely. I mean, it's, look, again, throughout the book, what I talk about is how the bankers and the cantillionaires, the people at the top of the system, they benefit from the money printing, and the rest of us pay higher prices for groceries and gasoline. I mean,
And
the one
taxes
that,
too. Our taxes go up too.
well, and taxes, yeah, I mean, and insurance, I mean, auto insurance, home insurance, all this stuff. But the one that just really blows me away is the grocery store. I mean, I do a lot of the shopping for our house, and I just can't believe what stuff costs. And it's very, very distressing, because you got to eat.
Yeah,
So,
just to survive, maintain your standard of living with stagflate, tax lie, and the Cantillon effect. I mean, Lawerence, like the real inflation, the government saying like, oh, the inflation rate's come down. The Fed's like, oh, we're not going to get it below our 2% target. I mean, the real inflation rate's been a lot higher than that the
of
last like
course it
5
has.
years.
Yeah.
Hmm?
I mean, the book shows this really. I mean, inflation varies a lot from year to year and based on how you measure it. But the real measure of inflation, in my opinion, is the underlying growth in the M2 money supply. And if you look at that for the 53 years from 1971 to present, that's kind of about 8% a year. So 7 to 8% a year. So my
That is
belief,
a lot of stagflation. I mean, that basically
right.
Rule 72, every 9 years, your purchasing power is going to be cut in half at that inflation rate that you just said.
That's exactly right. And that's so that, now some years we report it higher, some years we report it lower, whatever. I mean, everything fluctuates within that, but that's kind of the rate we're going at. And that's why that's why the country is so upset. That's why everybody's hurting so badly. That's why there's so much political dysfunction because everyone knows it's hard to make it in America today. I mean, it just is. And you can't necessarily retire with any comfort because you don't know how long your savings will last. Young people, I've got three kids in their 20s. They're all doing fine. They have good jobs. They make okay, okay to good money, but they're like, how am I ever going to buy a house? They're too expensive. I mean, it's really, really broken at so many different levels. There's so many
That's why
examples.
people are gambling, right? That's why people are
That's
gambling
right.
on these altcoins, meme
That's
coins, meme
exactly
stocks,
right.
sports
Well,
betting. They're trying to make.
that's why the lottery does well because if you feel like you got no hope in your life and you're screwed and you're going to continue to get screwed, you think to yourself, well, shit, maybe if I buy that ticket and it hits, I'll get out of here. And so, I mean, as you and I both know, the odds in the lottery, it's ridiculous. You shouldn't do it. You're just throwing away the money. And yet, a lot of people do it because it gives them some sense of hope.
So, last question here. I want to
Yeah.
ask about the valuation discrepancy between the gold price, which is at 2,900, and
Yeah.
the valuations for some of these producing gold miners. So, Agnico Eagle lately has had a nice rally, but they own arguably the two best lowest cost gold mines on the planet in safe jurisdictions in Canada, in Detour Lake and Canadian Malartic. But the other gold miners, the valuations, some of them are going to have good free cash flow and earnings, but some of these gold miners, aren't they pricing in like 18, 17, $1,800 gold? The valuation discrepancy is enormous compared to the gold price.
Yeah, it was enormous at 2070. It got more enormous gold. It got more enormous at 2300, 2600. Now we're at 2900. It's starting to catch up. I mean, my fund has just had a couple of very good months, and I've got a lot of companies that are up 40% in 2 months. But even so, they're still extremely cheap. And I think that what was going on here, the reason that they were so cheap, Jason, is that a lot of people were looking at the situation when gold broke out in March of 2020 last year, March last year, from 2070, and it went up, squirted up to 2300. I think a lot of people were looking at that and saying, well, this is a breakout that's not going to last. This is just a blip, and it's coming back down to 2000. Meanwhile, the cost of mining the gold has gotten higher. I mean, I remember when the all-in sustaining cost of mining an ounce of gold was under $1,000 for most of the major producers, and now it's 1,300 to 1,500 for most of the major. So your inflation has hit the cost of mining, and the mining business and the stocks go up. The mining business gets better when the price of gold goes up more than the cost of mining it. So you get a bigger margin, right? And I think what was going on is a lot of people were looking at it and saying, well, yeah, the price of gold's up, but that's not going to last, and the costs are going up, so we're going to go back to not making much money. And I think what's the market is now showing us is, oh no, maybe that's not right. Maybe we're not going to go from 2,600 back down to 2070. Maybe we're going to go from 2,600 to 3,500. And oh, by the way, we're making really good money at 2,600. And guess what? Or 2,900. Guess what? If we were at 3,500, it'd be crazy how much money we're making. And so what I'm seeing now is I think the market's kind of waking up to that. And you're not too late. I mean, we moved 20 or 30% off the bottom, but I think we've got a long way to go. Let me describe another thing that happened that I'm not sure you're aware of and your listeners should be aware of. It just stunned me. Last year, calendar 2024, and this is in my quarterly letter, which is on my news site or my website. Last year in 2024, the price of gold was up 27%. Okay, that's a big number. It's a good year for gold, right? And yet last year, the GDX large cap gold mining index was up 9%. So as
Yeah,
you and I both know, that's supposed to be the other way around. You know what I mean?
well, the GDX is at 42 when we're recording this interview. I mean, its all-time high was at like 64 back in 2011, and that was at $2,000 an ounce gold.
Right. Exactly. Exactly. And so what does all this spell? I think we're on the cusp of a real melt up in these gold stocks. I mean, I expect my fund to do
Well,
extremely well in the next year or two.
Well, either that, Lawerence, or the producing miners. So the mid-tier gold miners, and I'll name a couple. So like an Alamos Gold or a Lundin Gold, they're going to go out and they're going to go buy assets.
Oh, absolutely.
If the discrepancy of discount for the assets is that bad versus the gold price, and they have the free cash flow, they will buy back shares if their stock is cheap. They will increase dividends. Maybe there will be like a variable rate dividend or something like that, depending upon the gold price, or they will go and buy assets. Agnico Eagle just did a deal, but I think we're going to go see more of that from the mid-tier
Oh,
miners.
absolutely. I mean, there are so many, and they've underinvested in exploration and they've underinvested in their pipelines. And so, I own a lot of the junior miners, which are the companies that are trying to either bring a mine online or they're much smaller. And yeah, I mean, in my view, there will be an enormous acquisition cycle that'll start soon. It's actually kind of started. There've been a few deals, but it's going to and really ramp up over the next year or two as this bull market develops. I mean, I sincerely believe, Jason, we're going to 4,000, 5,000, $10,000 gold as this thing unfolds. And so, and I mean, these stocks don't even have $2,700 gold priced in. They're thinking it's going back down. And at some point, the people are going to go, wow, this is something different. We're not going back to 2000. We're at 3,000 and we're going to 4,000. When that happens, all of these companies will re-rate substantially higher than they are today.
Well, I think the other issue, and I think the miners can solve some of this with share buybacks, increasing dividends, get generalist investors interested in that, focus on maintaining profit margins and free cash flow growth. But the other major issue is that the non-G7 central banks, who were large purchasers of gold tonnage for especially the last couple of years, because the monthly dollar cost average purchases have about doubled since the Russia sanctions, and the Asian retail investors, they really don't have interest in gold mining stocks. So if you talk to them, I mean, like, they want metal. So they don't want Agnico Eagle. They don't want Franco Nevada. They don't even want profitable companies with free cash flow or a dividend. They wanted actual metal. So there was a lot of people buying exposure to physical gold who wanted no interest whatsoever in mining stocks. But if you're running these gold mining businesses, Lawerence, I mean, you actually have profit margins and free cash flow. You're going to go do something with the free cash flow. You're not just going to hold cash on the balance sheet.
Correct. That's absolutely correct. Yeah.
Yeah, so I expect it. I mean, if you're Agnico Eagle right now and you have two low cost mines and you did one small acquisition, I mean, if the valuation gap stays at these levels, they might go buy something else.
I think that's right. Yeah, no, I think that's absolutely right. There will be a lot of acquisitions. In fact, and that's one of the toughest things to deal with from a investment, point of view as a stock fund manager. I mean, one of the things that happens to me is I'll buy a company and I think it's going to go up 3 or 4x, and a bigger company sees the same thing I see and they like it a lot and they come in and they buy it, and all my others, at a 50% premium or something, and so I've made 50%, but I got the top number got clipped away. I didn't get the whole 3 or 4x because it got taken out.
Oh, you mean your upside was capped
My
because
upside gets
the mine
capped.
didn't get into production or something, and you didn't get any free cash flow.
Well, or because just because they buy, the prices are so depressed that I'm not the only guy that knows these stocks are cheap, right? So if I'm running Agnico Eagle and I look around and I might see little XYZ, gold company, and I realize that the shareholders there don't know what they have and they're weak hands. And so I come in and I say, hey, I'm going to give you a 50% premium to your current price. And they're like, oh, that's great. We make money. And of course, I might say to the management team, no, reject this deal. And no, shareholders vote against this deal because we really should get paid 3x what it's valued at today. But they're like, nah, it's a profit. So let's take it. It's
Well,
kind of a problem. you know?
Well, Barrick Gold just announced earnings today, and they said
Yeah.
that their free cash flow doubled. So, but
Yeah.
I'm kind of surprised though. So that'll start to perk up some of the other gold miners
Oh, yeah.
that people weren't paying attention to because Barrick has been a laggard with those numbers for the last 12 to 18 months with costs increasing. They haven't hit their profit margins or free cash flow that generalist money managers were expecting. So if Barrick actually beats with their free cash flow, the market's going to start to take notice of them and other gold mining stocks. I'm really surprised, Lawerence, that like a Lundin Gold and or an Alamos Gold. So those are the good mid tiers. They haven't gone and bought anything yet. Go and buy other miners.
Yeah, I'm a little surprised too. I mean, yeah, Alamos actually did buy something recently. I can't remember the name of it now, but they did buy something recently. But yeah, I mean,
Oh well, didn't they buy the one? They bought Argonaut, right? They bought the mine next to
that's right.
Mangino. So they
Yeah,
bought that one.
yeah, that's right. Yeah. So, yeah, it's they're smart. I mean, but yes, if I were running those big companies, I would be more aggressive right now. But to be fair, they're trying to be very disciplined about it, and they don't want to, the last big gold upcycle, they did a lot of stupid deals, and so, they're trying to be careful and not get too far out over their skis.
So do you think then that the miners will start to announce some type of variable rate dividend then where like they increase the base dividend a certain amount and then they say if the gold price goes to 3,500 in 18 months, this is going to be what, a 20 or 30% dividend increase? Do you think we'll see something like that with the producing miners?
Yeah, some will be smart enough to do that, and they'll have formulaic, dividend payouts. I think Wheaton went to something like that and still has it in place. But the others that are smart, I think, will husband their capital and will use it as long as there are undervalued assets that they can buy that are accretive. I'd actually rather have them using their capital to buy to get bigger and to buy those assets because when if you buy gold in the ground for a fraction of its real value, and then the advantage the big companies have, Jason, is they've got access to capital. The problem the little companies have is they can't get access to capital as easily. And so there's a real arbitrage here where a little guy might have a really great deposit, but it's $100 million to build the mine. He's having a hard time getting the $100 million. The big guy, he's got access to $100 million all day long. And so he can buy the little guy for, a small premium and then put the 100 million in to build the mine. And suddenly, he's created 100 million of annual cash flow. And so, it's a win-win. I mean, he's really grown the value of the overall enterprise. And so there's going to be a lot of that, just a lot of it. And I'm here for it. I mean, I own some of the big guys. I own some of the little guys. I'm kind of all across the board. But
Last question here. I want to
yeah,
ask you about which countries you think are going to be pro mining over the next couple years, going to fast
yeah,
track some mines. Do you agree? I interviewed another guest last week, another gold stock newsletter, Brian London. He said that the U.S. and Argentina are two of the best places for mining companies to invest and build mines for at least the next couple of years. Do you think that's accurate, or do you think
I
other
agree.
countries are
Well,
better?
certainly with this administration, I mean, I think the regulations and stuff are going to be lightened, and it's going to be easier for people to build gold mines in the U.S. Although it's never been that hard in like a place like Nevada. I mean, I had a mine in California that was a real problem, but um, yeah, I mean, I think those are two very good countries. I think Canada's a good country. I think Australia's a good country. I actually think a lot of the countries in Africa are good countries. In South America, it's a little bit more pick and choose. I mean, some people like Ecuador. I'm a little nervous about it. Peru has kind of gone a little bit the wrong way. There've been some issues recently in Mexico, which always used to be very good for mining, but it's not quite as clear that it's as good as it used to be.
Well,
So,
Argentina actually like has a $500 million tax break. So I think if a mining
yes.
company through 2026 makes a 500 million or more investment into building a new mine, they don't pay taxes, I think, for at least a couple years. So I think like that's a fast track project that Malay just put in.
Yeah, no, that's right. And so yeah, I mean it's look, there are places where mines are going to get built and that's a good thing. And but one of the things unfortunate about related to all of these mines, and it'll be an issue we'll have to keep our eye on, is gold price goes up a lot and these miners start making a lot of money. Historically what happens is the governments get greedy, and
The
they're like,
government's
okay.
like, oh, we want to renegotiate the royalty tax. Is that what you're
Exactly.
talking?
Exactly. And the miners are aware of that and they're pretty good at, coming together as a group and saying no. And the thing to keep in mind is that your average government employee in a foreign country doesn't have a clue about how to do this. So I mean,
Well,
like
actually,
in
they used to.
Venezuela they nationalized the mines, right? Figuring they just these greedy miners were making all this money mining gold in Venezuela, so they nationalized them. Well, guess what? It didn't work, So suddenly they went from having a slice of a big piece of income to having all of no income,
You remember years ago when the miners used to only put on their investors' presentations and the quarterly results like their cash costs? So that actually, a lot of governments in Latin America, they actually used to monitor all that stuff. So if the miners said that their cash costs were like only $300 or $400 an ounce or $500 an ounce, you would then see if the gold price moved up to 1900 or 2000 the first time, you would see the governments announce these miners are enormously profitable, even though the cash cost wasn't the real cost. You'd see these governments say that, oh, we're raising the royalty tax because these miners are making way too much money and we're going to
yeah.
take a larger. So they actually hurt themselves by not being honest with their actual costs.
Well, I think that's right, and I think that actually was one of the drivers for moving to the all-in sustaining cost standard that they now all use. To just show that it's expensive. I mean, mining is expensive, and the toughest part about mining is it requires a lot of capital costs, and that capital is trapped. You put it in a place with a mine, and that's that, and you can't move it. And if that country goes south, you're stuck. You know?
Well, unless you have the free cash flow, so the company at the company level takes the free cash flow from one mine and then invests into another mine or
That's right.
goes and buys an asset in another country. So that's
That's
like all the miner can really do.
That's right. I mean, yes, and that's why those miners that have different countries and different jurisdictions and multiple mines, are considered quote unquote more de-risked than the single mine country, company in maybe a country that's not necessarily considered to be stable. You may generate cash there, but it's considered to be risky, and it is risky.
Oh
So.
yeah, especially if the gold price goes to $3,500 an ounce in 18 months or less, or maybe we even go above that. Because I could see a big move coming, maybe after a little correction or consolidation again. After gold breaks 3,000, I could see another big move up, gap up to potentially 3,500 in the next 18 to 24 months.
That's my target. I think we're going to see $3,500 gold in the next year. I think we're probably going to see 150 to $200,000 Bitcoin in the next year. And that's without something really breaking. If, one of the things they talk about in the book, how the Fed's third mandate is financial stability. So if something were to quote unquote break, we had a stock market crash or whatever, the Fed would come and flood the economy with money as they always have in the past, and they do that because they don't want to have a depression. And so, if something like that happens, then all bets are off. I mean, then, gold could go to 5,000, Bitcoin could go to 500,000. I mean, who knows? But I'm just assuming assuming we kind of continue to bump along the way we've been going, just where we're moving toward a debt crisis. Yeah, $3,500 gold ought to be a no-brainer, and $2,000 Bitcoin or $200,000 Bitcoin, I think that's a no-brainer too. So
Don't we have another halving coming up for Bitcoin? So those generally like six
yeah,
to 8 months after a halving, the price of Bitcoin generally goes up again.
yeah, but that's a little ways away. I mean, I'm trying to remember when the last one was. Wasn't it April of 2023? So more, yeah, we in the Bitcoin cycle. The Bitcoin cycle is projected to top in kind of December of this year, January of next year. And these cycles are actually pretty consistent and predictable, and they follow the halvings. And so, my model is kind of Bitcoin's going to hit 150 or 200 later this year. And then, by the way, it might actually correct pretty substantially. I mean, as we all know, in prior corrections, it's lost over half of its value. I think it's getting more widely distributed, and therefore I don't think the corrections will be as big in the future. But I do think there'll be corrections because, like anything, people get over exuberant. Some people will use leverage to buy it. Everyone will think it's going to the moon. And of course, at that point in time, there won't be any buyers left and it'll reverse and come back down again. Then everyone will start saying, oh, Bitcoin died, it failed. I mean, I started buying it in 2014. So I've lived through a bunch of these. So I kind of know how this thing goes.
Yeah, a lot of boom and bust cycles. So
Right, exactly.
it's
Yeah,
kind of programmed into it with the halvings, and then you get a like, huge speculative crowd trying to get rich quick,
right,
and they get flushed out because they kind of
right.
buy towards the top.
Exactly. No, exactly. And, this is when monetary systems change, this is common. Everyone says, well, how can it be money? It's too volatile. Well, go look at the chart of, the gold price in the Weimar Republic when the Weimar mark was failing. I mean, look, it's like a heart attack chart. I mean, up, down, up, down, up, down. It's crazy, right? And, we're in a very big change in a time when a large change is taking place. And, there's going to be a lot of volatility when you go through one of these big changes.
So as we wrap up here, Lawerence, where can my listeners get your new book?
Thank you. Thank you so much for having me on. Let me pitch the book. So the book is on Amazon. You can buy hard copy, paperback, and Kindle. Audible, a lot of people have asked about it. It's in process. We will have Audible soon. It's being read by somebody now. Sadly, a lot of people want me to read. I can't read. I don't have the time. And this guy's got a better voice than me. So there'll be an Audible version out, within weeks, I think. The other two things I would say is I have a website, ema2.com. I have macro letters there. They're free. And I've referred to them a couple of times. So if you want to see some of the charts and the macro analysis we do, please go to ema2.com. Final thing I would say is I'm a partner in the Bitcoin Opportunity Fund, which is David Foley and James Lavish. And they had a great year last year. They were up 64% last year. It's a hedge fund that does Bitcoin private deals, and some other stuff. And they had a fantastic year. They're raising their second fund. You have to be qualified because the minimum size is 200,000. But anyone who's interested in that, you can reach out to them. Just Google Bitcoin Opportunity Fund or Google me and send me an email or a DM on Twitter. And then, as you know, Jason, I make a lot of noise on Twitter. So anybody, and most of it's just about monetary issues. So anyone who wants to follow me there and my DMs are open, I'm happy to try and help people.